we're just going to give a big chunk of that back to you so that, yeah, you can get a mortgage through us. And then all of a sudden you've got a huge lump of points where you can then furnish your home without having to pay for it yourself, right? And so as we think about our vision and our mission is to make home ownership more affordable and rewarding.
Hey there, points people. You just heard a clip from Kelley Halpin. Kelley is the co founder and CEO of Mesa, the first ever homeowner membership platform with the mission to make home ownership more affordable and rewarding. He is a 3 times founder and former early employee at Uber. And in this episode, expect to hear about how you can earn points on mortgage, childcare, and other large expenses, best ways to redeem Mesa points, upcoming program features, and so much more. And if you are looking to maximize your Mesa points or any other kinds of points, you can request a free personalized tutorial video for your next points trip at geobreezetravel.com/request. We pick one free tutorial to prepare every week, which you'll find in the free GeoBreeze Travel newsletter. So make sure you open our newsletter every Monday to see if your request was picked and prepared. And now, on with the show. Hey, Kelley, welcome to the GeoBreeze Travel podcast.
Thanks for having me. Excited to be here.
I'm excited to have you here and to talk about one of the newest products in the world of points and miles, which people have been clamoring for, which is how to earn points on their mortgage and a lot of other kind of home purchases. But before we jump into all of that, tell us about you and your background and what made you build this.
For sure. So I have always been in the startup world. So was lucky enough to get a job at Uber back in the day. And that's allowed me to start 3 companies since, and spent a lot of time in kind of consumer finance and loyalty and rewards. And most recently was working on a number of different financial products. And that's really where kind of the aha moment came from, because in that world of loyalty and rewards, the stuff better than me, you're always looking at consumer spend and trying to capture share of wallet, things like that. When you do it, you realize just how much money people are spending on their homes. And so ultimately, that is the problem we want to solve here at Mesa. We want to make home ownership more affordable and rewarding, because right now, home ownership is unaffordable in the US. The average American is going to spend a third of their income on their mortgage payment alone, and that's going up every year. As a nation, we spend over $8 trillion on home ownership, which is twice what we spend on healthcare. And so we believe the way to solve that is with our category, what we call homeowner membership, where we're going to give you value back for every dollar that you spend on your home. And we do that by bringing the credit card style benefit and reward structure that people love to all of the financial products and all of the spend for homeowners that have never had it before. So that could be our credit card, the Mesa homeowners card, the first premium card built for the modern homeowner, rewarding her where she spends her money. It could be our mortgage business, the Mesa mortgage, where you can actually get a new mortgage or refinance through us and earn rewards on that. And so it's really differentiated in terms of the value we can give back to the consumer, which makes their home far more affordable and rewarding and helps us achieve our mission. So that's kind of like how we got to where we are today.
There are a lot of different touch point purchases when somebody's going through the home purchasing and also just the home payment process. There's not just the regular mortgage, but also closing costs, the whole realtor thing, all the repairs and stuff that go into owning a home, refinancing and everything, homeowners association fees. Do you earn points on all of these things with Mesa, or there are different parts of here's my expense for housing on that kind of pie chart? How does that work logistically?
Yeah, so we want to make sure that if you spend $1 on your home, we're going to give you value back for it, right? So just using the card as an example, that's going to reward you on your mortgage payment, on your everyday spend of gas and groceries, on your home related spend, things you talked about, HOAs, utilities, even daycare, which we know is a huge expense for our consumer. So from where you spend your money every day, anywhere Visa is accepted. And then again, for the larger sort of infrequent purchases, whether it's a mortgage or a refinance right now, eventually we want to offer HELOC, insurance, warranty. We want to bring credit card style rewards to all of those financial products and all of that spend, because as you pointed out, it really does add up. And it's not just your mortgage payment, it's all of these other things. And usually they're very unexpected. I can share a personal anecdote. The month I started the company, I moved into a new house here in Texas, and the AC broke the day I moved in. And if Texas in the summertime, it's about 130 degrees. So I was acutely aware of those unexpected joys of home ownership.
Yeah, you mentioned earning points on daycare. We can jump into that. And also anywhere where Visa is accepted. A lot of daycares don't accept Visa. A lot of mortgage companies don't accept credit cards. So how does that work logistically?
Sure. So for your mortgage payment, that does not actually go on the credit card. And so we just validate that you are that person making your mortgage payments. We use a couple different AI tools for that, but we don't actually get in the way of how you currently make your mortgage payment today. So it's a really seamless experience for the consumer. Now, for things like daycare or home improvement or any sort of other spend, that does go through the consumer credit card, which again, that's anywhere Visa accepted. So daycare is one of those things that is growing in terms of its merchant acceptance, but that's one of the things we're working with our friends at Visa on is how do we drive more acceptance there? Because it's a huge chunk of spend for consumers. The daycare brands are really excited about it because it gives them access to a very attractive consumer. And so that's something you'll see more and more of over the next year.
So this only works on large daycare brands. It's not, let's say I hire somebody down the street, they watch my kid, I pay them X dollars per hour. I can't earn Mesa points on that.
Not yet. No, they need to accept credit cards. But again, that's one of the things we are actively working on for daycare and other sort of non-credit transactions today. And things like contractors and home repair, like a lot of those don't yet exist within a regular card network, but it's something we're working on bringing online.
You mentioned a verification system using AI of this is actually your mortgage. How does this work if somebody's got multiple properties, or let's say they're a real estate investor and they've got lots of properties? What exactly does somebody need to do to make sure that they're verified, that they're like, yes, this is my mortgage that I'm paying, versus somebody just being like, oh, let me just earn points on somebody else's mortgage, especially if it's a parent is paying rent for a kid, but like it's their house or something. How does that all work?
Sure. Yeah. So right now we limit you to sort of one mortgage per person. Obviously, there are folks that have multiple. And so, we're working through different ways to bring that experience online. But right now, sort of limiting it to your sort of one you're choosing. And so in terms of how that's verified, we'll ask for some information that we can verify in a couple different ways. And for edge cases like that, that's something that's an easy sort of thing just to reach out to our support team, and we can usually work through that and get it sorted out.
If somebody lists not their primary home as the one they're paying mortgage on, like let's say I live in an apartment, but I have a multifamily unit somewhere, can somebody earn mortgage points on a commercial mortgage payment like that, or just residential? And how do you verify?
I'll have to double check on that. I'm not sure. We haven't had anybody yet try to have a commercial mortgage, but I believe it is limited to an actual your home residence, but I can have our team follow up.
As far as other ways to earn points on Mesa, are there requirements of you need to make this many transactions, or you have to spend at least this much on a card on other things? Because most credit card companies are going to make quite a bit of their money on the interchange fees whenever somebody's buying shoes or groceries or dining out or something like that, which doesn't really happen in the housing industry. How do you guys make money on your side from people putting mortgage on credit cards? And then also, are there minimum requirements in order to earn these points?
Yeah. So is it right now in our terms and conditions, we do require in order for you to get rewarded for your mortgage payment that you spend $1,000 on the card each month. Now, what we're seeing is our customer is spending far more than that. So it hasn't really been an issue, but we do have that in place. And again, so we make money when consumers engage with our products, whether it's a card or mortgage business or other products we would launch in the future.
So is that $1,000 outside of mortgage payments?
Correct.
And then there's no minimum or maximum amount of points that you're earning on the actual mortgage itself, right?
There is an annual cap of 100,000 points per year, but it's obviously a pretty high one.
Yeah. Okay. So is it 1 point per dollar on mortgage payments, 1 point per dollar everywhere else? What are the main bonus categories and kind of earning structure when using the card?
Sure. Yeah. So it's 1 point on your base spend, 1 point on your mortgage payment, 2x points in our what we call everyday category, which is gas, groceries, EV charging, and then 3x in what we call home related spend. So that's improvement, decor, utilities, daycare is another one mentioned. So kind of thinking of all the money you'll spend on your home. And so that's from a reward structure. And then we have a bunch of great benefits that come with the card as well. So things like a statement credit to Lowe's for home improvement, Thumbtack for home services, some great pet ones that I use. I've got a chocolate lab, so Farmer's Dog, for example. So we've got almost, I believe, $800 worth of benefits on the card now, so which is great for a $0 annual membership fee card. And then we got a couple of other really exciting partnerships that we're going to announce in the next couple of months.
Fantastic. You mentioned you can earn quite a few bonus points on home improvement. Is that just something that codes as Lowe's or Home Depot, or how do you categorize if it's home improvement? If someone's going to Target and maybe they're buying stuff for home improvement, or maybe they're just buying snacks?
Yeah, so it's one of those things like American Express 30 years ago, kind of had to figure out how you define travel and dining spend. So we've been working with our members to kind of get their feedback on what that looks like. It is done at a merchant level. So it is things like home improvement or home decor, things like that would fall out of that wouldn't necessarily count. But it's a category we're constantly evolving and adding to. And so that's something that a lot of our members have written in. It could be a mom and pop hardware store, for example, and that's something we can add to the category. So it is constantly improving to kind of deliver the most value back.
How does this work for a big box store like Target or Walmart, or if you're buying stuff on Amazon where you're like, this is to improve my home? I bought posters, I bought some furniture, I bought some paint, but it was from Walmart or Target. How does that work?
Yeah, so those would probably fall under the regular base spend category, just because unfortunately we don't see the sort of SKU level data of like what you're specifically buying there. So as we sort of deepen partnerships with some of those brands, we should have the ability to kind of reward folks more. But right now, it's sort of been limited on what we can see just from the name of the merchant.
As people earn these different Mesa points, is there a sign-up bonus for getting this card as well?
We have tested a couple different options around that and should have some stuff to roll out soon. So I can't share anything yet, but yeah, we're always kind of looking for different ways that we can give folks the most value and obviously be more than competitive in terms of what else is out there in the market.
So you can earn points by using the credit card. How about on Mesa Mortgage? What is the points earning structure there?
Yeah, so that product's really exciting just because it's so differentiated in market. And so we can offer very competitive rates as an independent broker, and we can give you 1 point per dollar on the loan. So whether that's a new mortgage or refinance, so let's say you get $1 million mortgage, you can get 1,000,000 points, which is obviously approximately $10,000 worth of value that you can redeem for all the different ways you can redeem for travel, points transfer, gift cards, et cetera. So it's a very meaningful lump sum that is issued at closing. So that's a product we're really excited about and just gives a lot of value back to the homeowner.
What can you use these points on? So let's say somebody's put their mortgage, at least $1,000 to spend on the card, they're racking up the Mesa points. What are some different ways that people most often use these points?
Yeah, so we've got a ton of great options. Things like you can obviously book travel via our travel portal. You can take advantage of some of our points transfer partners. So we've got a lot of great hotels and airlines. We've got a lot of really exciting proprietary partners that we're going to bring online in the next couple of quarters. And then gift cards is another very popular one, kind of every brand you can think of. And then cash equivalent, so paying off your saving balance. We also just launched a feature last week, which is really exciting, where you can actually use your points towards making your mortgage payment. So it's a great way to sort of reinvest your spend back into your home. So we're adding a bunch more options there over the next couple of months in terms of redemption. Some really great brands we'll be able to announce here shortly, but all of that is around how do we make the Mesa point the most valuable point in terms of loyalty programs out there. And we want to make sure we're giving you more than anybody else because we're able to give you value back on spend or financial products that you've traditionally never gotten rewarded for.
With everything other than the points transfer partners, which we'll talk about in just a minute, is it a 1 cent per point cash out rate if you're using this for gift cards or paying off your mortgage? What are the different valuations of the Mesa points that way?
So it does vary depending on the option you choose. And you can see all the specifics in the app itself, but it does vary just based on which one you would want to use as a redemption option.
Let's say I wanted to do gift cards. Is that one, I would assume 1 cent per point, or is it something different?
I don't know the exact number in front of me, but yeah, we do try to be competitive with other card program and loyalty programs out there. So yeah, but I don't know the exact number.
How about with transfer partners? What do you think are some of the most valuable airline or hotel transfer partners as far as if somebody wants to get that really high valuation out of their Mesa points?
Yeah, I mean, the one that people have been really excited about is Scandinavian Airlines. That's one we recently added. And I don't believe there are any other programs in the US that have access to that right now. I could be wrong, but that is certainly one we heard from our members that they were really excited about. And the team there was great. And so we recently launched that and have seen really great interest there. But there's a bunch more we've got coming this year. But that one certainly stands out.
Yeah, I think you're right. Mesa is the only one that currently transfers over to SAS, which is very exciting because you can get lots of cool deals over to Europe that way. You guys have recently added in Air Canada, Cathay Pacific. You've got the Avios programs as well. So a few different ones there. Do you guys also do transfer bonuses? I know that people get very excited whenever there's a 20% or 30%, or some programs do 100% plus transfer bonuses over to different airlines and hotels. Is that something on your roadmap as well?
For sure. Yeah, that's something we're working with some of those new partners around rolling out in the next couple of months because we do know those are popular folks and something we're very excited about. So we should have more to share there soon.
As far as housing affordability, a lot of people are like, well, this is cool that we're getting rewarded on really high expenses and we can cash out some of our points to maybe just cover some of our housing expenses. But with everything that you're seeing on the mortgage side and just how much people are earning points on the steadily increasing cost of housing in the US. I assume this is just a US product. What can be done on that? Does Mesa have any thoughts of like, we can't really do anything about the cost of housing, so we might as well get rewarded for it? Or are there other initiatives in place to influence the industry to maybe not have gazillion-dollar housing prices in the future?
Yeah, certainly. Look, when you think about the home cost prices, that's a very complex issue with a lot of causes and therefore a lot of solutions. And it's going to take a number of different solutions across that ecosystem in order to actually solve it. And so we believe very firmly that rewards is a great way to actually solve that problem because at its core, it's just an ability to give that money back to the consumer. So our mortgage business is a great example of that. Like getting a home is really expensive. There's a lot of money that kind of goes to various middlemen right now when you get a mortgage, right? And so we're just going to give a big chunk of that back to you so that, yeah, you can get a mortgage through us. And then all of a sudden you've got a huge lump of points where you can then furnish your home without having to pay for it yourself, right? And so as we think about our vision and our mission is to make home ownership more affordable and rewarding, the way we do that is the more of the overall spend, no matter what product, credit card, mortgage, insurance, whatever, we want to capture as much of that as possible so that we can give a lot of it back to the homeowner because that's going to put real money back in your pocket, makes your home more affordable and rewarding. And overall, that can help bring down the cost of housing, which has the great opportunity to make it more accessible for everyone. It has downstream impact on things like homelessness, right? So this is the big area that we think we can make the most difference, but it's going to take a lot of companies like Mesa in order to solve.
Are you guys integrated at all or connected at all with building companies? Because a lot of people are saying that the solution for housing affordability, whether listeners agree with this or not, is build more houses, make it a supply and demand issue. Are there any initiatives with Mesa to connect with that as well? To just be like, if we can make more houses, get people to sign up for Mesa as they're buying more housing, reward them for that, that'll hopefully also bring down the cost of housing if we just build more houses.
Yeah, no, you're certainly right. More supply always helps. I think I live here in Austin, and I think Austin has done a great job as a city of making it easier to build more housing. And you've seen that has helped the overall cost of home ownership here at a minimum not rise as much as other cities where it's harder to build. So yeah, we do work with a lot of real estate brokerages, lenders, and servicers, and now are talking to more and more builders around how can we add value to their business, we together better solve that mission. So I think it's a great idea. And I think, yeah, that is certainly one of the most promising solutions around solving for that home cost crisis.
Does this work on co-ops and also like different condos? Because there's rent on one side and then there's full home ownership on the other side. There's certain arrangements financially that are a little bit in the middle. How does Mesa work with those?
Yeah, it probably depends on the specific provider there. Cause yeah, as you mentioned, like they're all a little different and there's a million different tools for those types of things. So again, like as long as we can validate that you are making your mortgage payment and if you are able to pay for your HOA with the Mesa card, obviously you can get rewarded there, but it really just does depend. But we've got a really good support team for stuff like this because home ownership is complicated and there's always a million different service providers and things like that. So we do a really good job of being generous to our members and working through with them to make sure that they're getting the most value because it's not always a very cut and dry, seamless experience, as any homeowner knows.
When people have home ownership, a lot of what happens on the vision board is they also have a car because a lot of these homes are built out in the suburbs and everything. Is there anything in the Mesa points earning atmosphere for car payments, car leases? I know you mentioned gas is one of the points earning bonus categories as well. But if owning a home a little bit outside of the center of town also means higher transportation costs, how does that work with the Mesa ecosystem?
We haven't gone in that direction yet. I think for me, it's really important that we are hyper focused on our homeowner as a customer. And so, yes, most homeowners will have a car, but every person that has a car may not own a home, right? And so, want to make sure we're really focused on the things that are going to deliver the most value to our customer to start. But it is a huge area of spend. And so we see that with gas and EV charging. I think there's certainly interesting things around insurance broadly of homeowners insurance is typically bundled with auto. And so I think it's an area we want to get to over time. I think right now, kind of more focused on sort of the things that are a bit more on the nose for the homeowner, but it's certainly something that we're eager to learn more about and see if we can have the right to play there.
A lot of people, as they get deeper and deeper into the points and miles game, find themselves making some strange decisions in the quest to optimize their points. One of those in the future I can see being, I bought this house to earn more points, which to anybody listening to this, please don't make your home buying decision based off of how many points you're going to earn off of said house. What kind of financial education do you think that Mesa can either take part in or is already taking part in to say, here's how much house you can afford, slash, if you should even be buying a house, and the number of points that you will earn on said home purchase is not the end all be all. Please don't let that be the driving decision for where and how to buy your house.
Yeah, I would second your statement there for sure. I think we, as a mortgage broker, for example, when somebody inquires about a loan, like there's obviously a lot of paperwork and rules in place to make sure that people are doing things that are in their best interest. But I really think it comes back to our North Star. Like for us, we want to make home ownership more affordable and rewarding, right? And so everything we do is around how are we maximizing the value back to our consumer? Like how are we living up to that mission, right? And so that sort of guides us in terms of like, we want to serve as the best products and services to our consumer. We want to make sure they're getting the best value, not just from a points perspective, but the most competitive rates and things like that. So the last thing we would ever do is try to push something on somebody just to optimize points. Very different of taking a layover so you can get extra United points versus something as important as your home, right? And so that mission is a North Star for us. So we hope that earns us the right to be the trusted partner for a homeowner of, if you spend $1 on Mesa's platform, no matter what product, like this is going to be the best thing for you as a homeowner.
Just as points and miles is not for everybody, there's tons of disclaimers out there of like, hey, if you're in this kind of financial situation, maybe don't try to play this game of points and miles and trying to fly business class. There are other financial things that you should worry about first. What are some of those prerequisites for home ownership? Because as much as some people are like, it's for everybody, everyone should like ideally be a homeowner and own their own house and all of that, nothing is grand sweeping for everyone. For people who are thinking about becoming homeowners, what is your advice to them on get this in line first? Here's how to decide. Should you rent? Should you buy? Here's how to make some of those decisions.
Yeah, I would say I'm certainly not a financial advisor. So I would encourage folks to find the right folks in their life who they trust for those types of financial decisions and other big ones too, right? So that would be first and foremost, like you make sure you've got people around you that you think are giving you good advice. So that would be like the most important piece of advice that I would give. But then also when you would come into our ecosystem and inquire about a loan, for example, that's one of the things that one of our loan officers will work with you around is, hey, this is what you can afford from your credit and down payment and things like that. But certainly, like everything in life, make sure you do your homework and find people that you really trust around you.
For everybody who is not a homeowner and they're like, I have no desire to purchase a house anytime soon. I either like renting or I like being a digital nomad, not being tied down to one place. Where do they come into play in the Mesa ecosystem? Why would they get a Mesa card?
Yeah, I think deep down, everybody does want to own a home, but obviously in the context of trade-offs, like they may realize that they can't do that and the other things they want. And so I think at its core, there's a reason why it is the bedrock of the American dream is to own your own home, right? And so deep down, if you had the option to own your home or not, all else equal, obviously you would take that. And so our focus is how do we make that more possible for more people and more affordable for the people that are currently owning a home. So I think for folks like that, that's where when you are ready and you want to own your own home, like we want to be the trusted partner where you're going to get the most value back. We want to focus on all of the people now and the 84 million mortgages out there of how do we make those more affordable? Because if all of those homes are more affordable, that means it's cheaper for somebody to get into that ecosystem to buy a home. Right. And so that's where we've started to play. But overall, that should help everybody and democratize access to home ownership by starting with the people that are currently in their homes.
So for everybody who's not currently a homeowner, and I'm very weird where I'm just like, I don't really want to buy a home. I don't want to own a home. It's not on my bucket list right now, even though we can afford it. But for people like me, is there a reason to get the Mesa card for points earnings or other things? Is there a reason, or is this purely like we're just targeting people who currently own a home / very soon will own a home?
Sure. Yeah. I mean, I would say it depends on you and where you spend your money, right? Like if you actually spend a lot of the things on your home, whether you own it or not, there's a ton of value that you could be getting, right? Whether it is things just like cleaning services through Thumbtack, or we have terrific pet benefits. So I spend a lot on my dog. I don't know if you have a dog, but if you do, you probably spend a lot as well. I think it just comes down to you and where you spend your money. Now, whether or not you own your home, if you spend a lot on your home and the things in it, the decor or whatever, this is still a great card for you.
Yeah, that's a good point. Or if somebody's just like, I want to earn points on daycare, we use a big daycare center. Even if you're based in New York and you're like, okay, I'm going to rent forever. New York is what it is, or you move around a lot. But for whatever reason. I don't know why somebody would be moving around a lot, but moving their kid to different daycares. But I'm sure that situation exists. You could still earn a lot of Mesa points that way.
Yeah, and what we hear from folks, particularly if you have two kids, typically your daycare bill is more than your mortgage. So that's another area that we think is really great.
As we're kind of wrapping up here, what are some of the other features of Mesa that we haven't discussed yet? We've talked a little bit about how to earn points, different bonus categories, where to transfer your points, where to use your points. What are some other features that you're excited about that we haven't really touched today?
I would say, the big area where I think we are best in class is the benefits that we provide, right? Particularly when you think about a $0 annual membership fee card to some of these really great brands that are particularly relevant for homeowners, like whether it is like your Lowe's or your Thumbtack or pet related. We have Wag and Farmer's Dog. We've just got a ton of really great partners that are really relevant to homeowners. And we've got some really, really big ones that are coming in the next couple of months, which I can't share yet, but are just really important when you think about categories like grocery, for example. So I think that's one of those things that makes the card kind of a no-brainer because you're going to get all this value on day one without having to pay an annual membership fee.
Aside from mortgage and daycare, what do you find are some of the largest expenses for people who are homeowners where you're like, in the future, it would be great if we could also, economies of scale, tangentially offer something in this category? It's not here yet, but we know you guys spend a lot on cars. We know you guys spend a lot on taxes. Like, does Mesa earn points on property taxes as well?
Yeah, if you can use a Visa product for that. Yeah, so certainly taxes are an area we see. Home decor and home improvement are two very big categories. Just you think about a new homeowner, right? Home decor, you've got a lot of money you want to spend on furnishing or improvement for making repairs or improvements or whatever it may be. So that's why particularly we think about like Lowe's, one of our key partners. They've been really great and people have loved that benefit because it is just a huge chunk of spend for homeowners, particularly new ones.
A lot of people make their home purchasing decisions based off of the school district. And so this kind of ties in with the daycare points. Is there anything that you guys are looking into maybe for the roadmap in the future of private school tuition? Because that could be huge as well.
It's a great idea. We have not thought of that, but I will make sure we do.
Yeah. Any other categories? I'm not a homeowner. I don't have children. I don't have pets. I have so few expenses in these categories. What are some of the other ones where your target market has a lot of expenses in related categories?
Sure. Yeah. I mean, and you think about everyday expenses of like grocery and big box stores, like those tend to be ones, and they're just very frequent, right? Because particularly if you've got a family, you're going to spend hundreds of dollars a week, every week on groceries, right? Like that never stops. So those are ones we consistently see. And then certain big one-off projects of sort of whether it's home improvement or home repair, those are less frequent, but very high transaction size. So those tend to be ones that certainly come to mind, but I'm sure there's other like interesting examples. Like you mentioned school tuition. I think this is where we want to keep learning from our members. How do we meet her where she is, right? And daycare is a great example of that. Like we heard that from a number of folks. We figured out how to make it work. And then it's been really successful and customers have loved it. So any and all ideas like this are always welcome.
Is it possible to integrate this in with healthcare at all? Because as people have houses, they have kids, they have pets, even veterinary bills, we can cycle that into healthcare. Is that something that one day we can get more credit card points on, or is that entire ecosystem just so complicated it would be really hard to tie in the merchant category codes?
Yeah, once we solve housing, our next trip will be fixing healthcare. But no, I think it is very complicated, healthcare in the US in particular, having worked in that space in a previous life. I think that is a whole different animal and beast and different consumer. And so probably a bit far afield for where we are now, but I hope there are some great companies working on that because it's a very real problem. As somebody who's a former fat kid, like health and wellness is near and dear to my heart. But yeah, healthcare is a very complicated and heavily regulated space. So we don't have any plans as of now to kind of move in that direction.
We have mostly American people listening to this podcast, but every once in a while we get Canadians or some other international. Any plans to expand outside of the US, or is US mortgage so different than any other country that it's really a specialized skill?
Yeah, I mean, certainly something over time we'd be interested in both, but cards and mortgages both being very heavily regulated and just very different in the US versus other markets. So no plans as of now, but certainly something if we can figure out the right to win there and think we have a compelling offering to consumers, like, and that's a great opportunity for us to grow, we would look at it. But right now we got plenty of wood to chop in the US.
For sure. Well, if people are interested in signing up for Mesa or learning more, where would you like to direct them to go?
You can go to mesamember.com, our website. You can learn more about all of our products. And you actually will have a unique referral code, which you should share with your following so they can get rewards, and you can get rewards when they sign up as well.
Fantastic. Well, thank you so much, Kelley, for joining us on the show today, for building this, because people are very excited to earn points on housing and very excited to see what's in the future for Mesa.
Well, thank you so much for having me. This is great and really, really appreciate it.